Hi folks, Lee Gettess here with the Market Sense for the week of March 24th, 2015. We are going to look at some charts that come from the Trade Navigator software, and we're looking at a weekly bond market chart here, and boy, have things got interesting in the last couple months. This breakdown from the high back here looked really bad. I mean, they took out a lot of weekly lows, they took out swing lows, and this really very much looked like the end of the bond market rally. The comeback has been incredibly strong so far. This is less than 3 weeks to almost retrace everything that it took them 5.5 to get down there. So here's the deal. They are right in an area between where they are now and let's call it 166. It's really 65.29, but let's call it 66. They're right in an area where if this really did signify the end of the bond market, this is where they should turn down from. I don't really expect a double top. I don't expect a marginal new high. If they go higher, I think they're probably still going higher, although they're going to go down at some point because the Fed is going to raise interest rates. But right now, this is the area we're interested in. From where they are currently, let's call it 65.12 up to about 66. Right in there is where they should turn down from if, in fact, the trend has changed to down. And I got to admit, I'm not sure it has. But for the trend to remain up, the support to hold is 162.14, and you can see they've come nowhere near that so far. So the risk is there that they're going to blow right through the upper Keltner band and everything else and just keep going. But again, I reiterate, I know I'm repeating myself, if they are going to turn down, the area right between 65.12 and 66 is where they should turn down from. Now we'll see if they do. Stocks have, well, sort of an opposite situation, but not really. It basically only took them 1 week to come back up after a couple weeks down here, but they never did any real damage on the downside here. And now this week it looked like they might be going up to the 2125 area, and were they to do that, they should have held 2095, but they don't appear to be doing that. So turning back down here, it's possible there's support here just below 2070. It's also possible they're going down closer to 2040. It's also possible that they're not going to either of those. They're just going to go a day and a half to 2 days down and turn back up. Any way you look at it, I think it's time to look for a buy. I'm just not sure which of these levels should be the one we look for, but I kind of expect they're going to turn back up and we'll see them at new highs in April. I'm just not real sure where that turn up is coming from, but that's what I'm looking for. I'm looking for a place to buy them, and of course we go down to lower time frames to do that. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.